The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, every market day, and following Steve Rhodes, 2 hours. Very, very educational 2 hours. Thank you, Steve. Always appreciate it. And today being Thursday, I am followed by Larry Pesavento. Larry is followed by Daryl Martin. Daryl is followed by Dave White. Dave is followed by Andy Hecht. Andy Hecht is followed by Tom O'Brien. Don't forget to put in your trades, folks, because we're having a fantastic competition out there. And I believe there are some really fabulous winners. Gee, double the initial entry, 25 grand of demo money that was used. That is just fabulous. Using, of course, the Nadix platform. Go to the front page, check it out. Of course, you can't. So you'd like to sign up. For those who have signed up, you want to be able to be there for your $100, perhaps your $100 gift today. Make a trade or two or three. All right. We've got the Dow up for what I'd say to subscribers over here. Let me just show you this chart. Well, first of all, this is the E-mini. I always show this. Let me just go right here. Click. And while I'm getting this up, the top winner so far is Zhu Vang. And that, what can I say? I mean, this is really exciting. I mean, it's exciting because for many, it's just a new platform. And for those that are actually involved in the competition, it's just an exciting time because you get a chance to do something perhaps you've never done before. Perhaps you've been honing your craft, but experience is just your best, is the best learning tool, is to go through things over and over, assess where you went wrong. So, wow, over 46,000. That is fantastic. Zoo, that, congratulations. More than congratulations. That is fabulous. Now, what I said to my subscribers this morning, based on a number of aspects to my opening call, is that I expected some kind of a pullback. The best case I could see was a doji-type close, narrow close with narrow wicks, to a moderate down move. And I think we've run our course to the upside just for right now. This is what I'm looking at. If you look at the daily E-mini, this is the December future contract on the S&P. What I call the squash between the stochastic and the MACD, one of the reasons many years ago, maybe 20 years ago, I started to put the stochastic below the MACD. I think I did it initially, and then I found that it gave me some fantastic readings that had nothing to do with anything other than a visual representation of what's going on. And what that visual representation said, that when you get the squash between the MACD, a certain combination of factors, it can take you very quickly with a very wide expanding MACD. That's the fast-moving average over the slow-moving average. The trouble with this is that you don't know it's happening until every single bar starts to expand. So if you're waiting to get in, you don't actually get a chance to get in unless you dive in. I wasn't prepared to dive in because we were not in the long position of either the Dow or the S&P. So now you have to wait for a pullback. That pullback should be coming. Now what I'm looking at is that methodology that I use can take you very quickly to a leg C. Then the stochastic starts to decline. Takes a couple of bars, in this case days. And then what you're looking at is the D is made by the fast-moving average of the MACD. These are two moving averages. The red one is the slow. The green one is the differential, the 9-period differential between the 12 and the 26-period moving average, exponential moving averages. At 93%, that's very strong for the E-minis, and that says there is tremendous support. The 9-period moving average is at 1662. My guess is 1675, 1671 would be very strong support on a pullback here. But you've also got to look at the 120-minute chart here. I've got a peak E with a little inverted hat at 1684, round number high. That's the rectangle formation. They can last a lot longer than you expect. Even this rectangle that I drew here, although it's broken out and doubled in price, not doubled from the low, I mean the rectangle is doubled. It is still too in a very narrow range. And the technicals are starting to slide, but the price is not. So that's some sign of stability. But at some point, the price will try to dip. And the very interesting thing is that what was the high of 1677 before that area becomes the low. That's what you're going to watch for support. Now, a breakout on the upside, I said this morning, is no more than 1683, which it hit, to 1685s. 1687 is unlikely until maybe later in the day if there's some kind of a burst of energy. I do believe that we're in for a narrow trading day with a downside bias or a lack of upside follow through. Fantastic move from 1685 to 1685. Was that 85? That's wrong. That should be 1618. Wow, that's a mistake. There were 1618s. So 1618s. All the way at 70 points. That's a fabulous move. Now you got to expect some digestive period. Now I want to go quickly to the down. Then I see in the den that I do a lightning round. We've got a couple of questions there. Look at this. Whoops. In your rush, make haste slowly. Great expression. Let me take that. This is in fact leg D in the 120-minute chart, and it's above the 200-period exponential moving average of the Dow. The 200-period moving average is at 15,237. The 9-period moving average is just about across to the positive side. That's a positive, but it becomes a short-term negative because although people think, oh, this is fantastic, it really is a lagging indicator. So let me get rid of that, and I'm going to show you what I'm looking at here in the weekly chart. This weekly chart says that there are a couple of patterns you've got to be aware of. And one is that if you make higher highs and higher lows, there's a trend line that will take you to about, let me just throw that in. Trend line will take you, if there's a breakout to the upside, somewhere into the 15,780s. That's if that happens. There's also potential for a head and shoulders. I don't know about that yet because the technicals in the weekly chart were quite weak. But look at that squash between the MACD and the stochastic at 92% in the daily chart of the Dow. So far, that has to be considered a positive. Most importantly, we've broken above that ugly candle of the 15th of August at 15,332. We're at 15,322 right now. We're into 15,345. And that was important. The next level of resistance going step by step would be 15,504. But let me just quickly go here, and then I'm going to run all the numbers. There's a rising wedge pattern that I show. This is what I show my subscribers every day. I go through all these different patterns. I don't know if I can pick it up right now. Let me just try to do that. It'll be fun to do. Yep, it's over there. I don't want to go there. I want to go there. Oh, I took it all out. All right, forget that. I won't be going there. Let me get out of it. Out. All right, sorry. Let me go back here again. All right. So there's a rising wedge pattern in leg D. And I was anticipating some kind of a doji pattern right at the apex and then some kind of a pullback. The book says, just as the book says, over 80% of the stochastic is overbought and under 20% is oversold. And I say, a contradiction in terms. Over 80% is very positive. If it stays there, it's very positive. Under 20%, if it remains there, is very negative. The same I'm saying here, that the rising wedge pattern, where many books will say, uh-oh, be careful, because you can come all the way back to the bottom of the start of the rising wedge. I say, no, you come back usually 15%, 8%, sometimes a little bit more. At this point, 15,167 is a very strong support level. If it does pull back, my suspicion is that it'll go sideways. We might take a day or two here to consolidate these huge gains. It doesn't really matter. What's really important is that the volatility index remains at 13.85. That is buying pressure. As soon as, and I believe it will, by the end of the day, there's a good chance that it'll go to the 1420s, maybe not today, but by tomorrow. That'll say, okay, now we've got the consolidation. But in this low range, That's buying pressure. Look at the cup formation. I've got that cup formation nicely drawn here. Look at the S&P. I think I've got it. I should have it. I know I did it. No, I don't have it. Where did I do it? Oh, I did it here. This is the cup formation. I knew I did it. There. The cup formation in the Chapman wave methodology is what I give my subscribers every day. There's a whole number of lines in this paragraph on the assessment of the Dow, etc. And as far as the support is concerned, we're looking at the level of resistance at right there, left side, right side, price, time match. It hit it exactly. There's an inside Chapman wave, inside wedge, diagonal line, hit that. I'm looking at this as if it breaks out above it, that's very positive. My guess is just going to hang around here for a little bit, pulling back, digesting these big gains. And that's going to be an opportunity to assess which stocks to get in that you might have missed, as well as which stocks are going to be potential shorts. Right here is a period where I'm starting to look intensely at short positions as well as long positions. So that's the Dow there. And just let me go on with the story. I was asked to do some of the metals. Let's do that right now. Gold is trading down $33 at $13.30. What I'd been looking for on the GCZ, when I'd been asked the question, I said that there's a chance that gold is a trend line that's coming down right there. And that trend line says that the low round that I anticipated a pullback from the peak B in the weekly chart, peak F, alternate counter, peak F top on the December contract of 1434, round number high. And that pullback should take you down to this candle right here. No. If it broke the support, I'm sorry, I'd said if it broke the support at 1351, the support of the 20th of August, then there's a chance that you could come down in a kind of an Eiffel Tower, up, down, move in the daily. That'll take you, and the key level here is 1317.90, the low of the 15th of August. Remember, the 15th of August was the gap down, that usual gap down, a horrible candle on the way down, that both the Dow and the S&P have filled, gone to the top. Now, this is the candle in the gold. Is gold ready? Well, the MACD and the stochastic are still declining. The 120-minute chart, if I can go to the GLD just for a moment, because I have done that. This is the price. You might not notice it. This is 120-minute. Right there, I'm circling it because it looks like you're eating your breakfast and you got a little splot right there on your screen. No, that's a price. Well, this is into the support level. And the GLD has support between 127.98. If it takes that out, it's really important to hit 127.38 and then rebound strongly, because if it holds down there, it could keep going down. I don't know about, I said I don't think it's going to go back all the way to the low of 123.55 back on the 6th of August. But this whole area of the 127 to 126 should be major support if it pulls back. If it takes it out, that's very ugly. So that's gold, the GLD. If it bounces, the bounce is going to take a little while. It's going to take a while to get back to the 131s, but it could start the process. Couldn't start it right from here. I'll do silver as well, Rob as well as Gigi.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman. Dow's down 5. S&P's down $1.83. As I said, consolidation day. Very important after such a spectacular move. Just right off the bottom. Just down really. S&P, Q's made new highs. Just a great move. Needs time. That's all. I've got Ken in Fort Madison. Hi, Ken. How are you?
I'm very good, Basil. Thank you very much.
I'm going to ask you to hold on for 1 second. I wanted to get to you, but I know that I'll forget. I promised one of my subscribers to do an email. He emailed me and asked me yesterday, and I never got to it. I said I would. I just want to quickly go through something here, and then I'm going to get to your call. He was asking about why I had an alternate count in the weekly chart of Facebook, FB, when I was doing all those different charts yesterday, LinkedIn, Facebook, Netflix, and Yelp. I think it was for Dale. Yeah, it was for Dale and the Cayman Islands. Now I can go quite, because the stochastic and MACD have acted so well, I can call it leg C. The reason why I called it a C/F with a preference for C before was that the peaky at 32.51 or 57, whatever it is, back on the week of the 1st of February, pulled back and started a brand new buy mode, but it never took out the previous low. So I wasn't sure if it was a continuous pattern, but it was so strong, and the doji candle gave a kind of a halfway marker sign. I just had to be careful. I'm calling it leg C. That's very positive for Facebook. On the weekly chart, the daily's a little bit toppy here, going to leg E. In a narrow channel, and we'll see it's got tremendous support at 43.41. If that breaks, it can go down to 42.20 or a little bit lower. Just wanted to get that down. So, Ken, let's go. You wanted to look at?
TLK. I talked to you last Thursday about it, and you told me to call you back today. After I talked to you last Thursday, I had to go to Rochester, Minnesota, so I put a limit order in on this TLK at $34.60, and it filled on Friday.
Fabulous.
I just wonder what you thought about it now.
Well, you know what? Why is this a little slow now? Uh-oh, I don't usually have a little problem. Let me just get to this. Oh, is that freezing up? I don't like this. There you go. What I said to you is that there's a pattern that I look at in the Chapman wave methodology. It's a very clear pattern. It looks like a lowercase h. I'm going to try to draw this in. There, just there. Click. Why is it not clicking? Uh-oh, I've got a delay here. I wonder what that is. This is, I think it's the computer. Uh-oh, it's running slow. I'm going to do my best here. We're going to make this pink. I'm going to make this thick. I want you to be able to see this. If you're looking at anyone looking at Tiger TV,
yes,
you'll see this pattern. And the pattern that I'm showing right now is a pattern that I call the lowercase h. And what it does is it says a number of different things. It says that if there is a break and a close below the left side low, in this case, the close was $35 round number, but the low was $34.80 on the 27th. What it did on the 6th is it closed at $34.78. So $34.78 is just a fraction below the low, the previous low. But we didn't know it at the time, but there was a doji candle that formed, and that doji candle was coinciding with what I had spoken to you about that was a somewhat of a positive, and we didn't know if it was going to work, that the stochastic was rising a little bit as the price was falling. That's called a positive divergence. And the only way that this can rally and then break above the previous arch high, which would be at 38.30, is if you actually got a buy signal, and that buy signal went very quickly to a buy mode. Well, since we spoke, today's Thursday, so here's Thursday, here's Wednesday, here's Tuesday, here's Monday, and Friday at the close it did exactly what we anticipated was a possibility, and I said to you, if ever it was going to stop, I think I looked at the 120-minute chart, it should do that right about there. And thank goodness it did. Now, what happened is you got filled almost at the low, right?
Yes, I did.
So it's fabulous that you were filled at that point, because now I can say to you, I think that you've got in at a perfect entry point, and here's the reason. A breakout in this particular pattern from the H, closing above the previous high of 38.30, especially now confirming today a leg B, says that there could be another arch. It could even turn into a larger arch. But you're fortunate in that I'm going to say to you, some part of your position, not your core position, but some part of that position can have just doesn't have to even be a stop, but it's just something to be really careful of. If it breaks to 36.59, it's at 38.91. TLK. TLK happens to be PT Telecommunicatie ADS. Now, I'm going to also go through a couple of other things, because all of a sudden that weekly chart is making something that I would consider very positive. Certain things happen. So hold on. You've got a great entry, and we'll talk a little bit more about TLK as soon as we get back with Kent and then Brian in Jackson, Mississippi.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. We got a little slow computer there all of a sudden, but I think we're going to be fine. There you are. Okay. Just to answer the Dan SWKS, looks like it's pulling back. I'll try to get to it before the show's finished, but it's better hold $25, otherwise it's going down to test 24.50. I've got peak E in the daily, peak a leg E in the weekly. The monthly looks kind of a little shaky there. So now we're going to go back to Ken. So this is what I like about the TLK chart, is that on the weekly, now we never know for sure because it's still very young and it's in its infancy in this rebound thus far. But if TLK is able, instead of breaking 37.50 key support in the next 2 days, if it's able to move up towards it's at 38.80. If it can get to 39.50, it has a chance to get into the gap. That gap is going to be really important for the daily, and that gap is just about 40. Let's go to 40.30. I don't want to move my pointer right now. I can. Yep, there it is. It's at 40 points. No. Yeah, 40.74. If we can get into the 40.74 level, then finally the 200-period exponential moving average of 41.83 kicks in. All of that is a prerequisite to saying that the weekly chart has gone down. And what I'd said to you, it looked like the lightning rod, you know, that Larry talks about, Tom talks about, Steve, everyone who does the different Fibonacci patterns. You look for an A to B equals C to D, and that looks very much the same thing in the weekly chart. I love when you get a very sharp trough A and then a trough B, and then it's like everything is done and it's ready to move on. I wouldn't have said that if it hadn't bounced nicely off that 34 level, but it has, and it's at 38.80. I mean, that's 4 points. It's about 11.5% and 12%. I like that. It's improving the weekly. I'm not talking about the monthly at all at this particular point. If it gets to the 41.18 level, it's like a fulcrum in the monthly chart. It says, I've gone all the way up to 50, I've gone all the way down to 34, and now I'm bouncing back towards a 50%, maybe 46% area. That's a good sign. So let's go step by step. You're in the trade. I like the trade. This is a little bit like I was discussing the UNG yesterday, and I had to wait, UNG, and I had to wait for today to see what would happen after the report came out at 10:30. And I called her yesterday. I think it was Lou in Nashua. I didn't want to give him anything because there was that same dreaded that H pattern that was successful when the report came out. Now the UNG is acting quite well. It makes the weekly very strong, and that's what you want to see. They a little bit different patterns, but the decline in both happen to be pretty much the same. So let's go back to TLK. And what I'm going to say is in the TLK, the most important thing that I'm looking at right now is that the rally that's begun is in leg B. If it can get to 39.72, I'm going to go from a buy signal to a potential buy mode if the stochastic can get up into the 72% area. So I'm going step by step. It'll start to fail if it breaks 37.40, that area of support. Not fail, but it'll say, be careful, there could be another arch pattern. I love what's going on. I think you've got a great entry point. I personally wouldn't do any adding now. I'd rather do adding because I know you like to look longer term on the weekly, and maybe in another 4 sessions time, maybe early next week, we can look at the weekly and see how that's doing. Hey, congratulations on a fabulous entry, Ken. Nice.
Where would you put a stop at?
I'd put a complete stop. On one part of your position, I'd put a stop at 36. I'd call it 36.75, 36.70. And on the other position, I wouldn't take a loss after doing so well. I'd say 35.57. That way you at least make some money. That would be the second stop on the core position. Hope that helps.
Okay, thank you very much, Basil.
Thank you. Congratulations on a great entry. Or just about at the low of this particular stock's decline. Let's go to Brian in Jackson. Hi, Brian. How are you?
Hey, Basil. Thanks for taking my call.
My pleasure.
I wanted you to, look at IBM. It's one. There's about 5 stocks that I trade in and out of. I try to keep it simple with about 5 different stocks, and this is one of them that I'm in and out of. And it's broken out the last couple of days, but it's heading toward a gap area from about a couple of weeks ago.
Right.
And I'm looking to see if this might be a good place to take a short position, or should I go long at the gap?
This is what I'm going to... first of all, congratulations on trading this. It has gone in the Chapman wave methodology. We always look for a peak A to a B to a C to a D as long as the technicals are confirming. This has gone from the 181.10 to 191.32. It's only 10 points, but with IBM these days, 10 points up is fantastic. Now, this is a little different to that A to B equals C to D in the weekly chart, in that this is just the start of a move after taking quite some time. The others didn't take too much time when we were looking at that same pattern in the weeklies. This is what I'm looking at right now. In IBM's daily chart, what I want you to look at is that there's a chance that this is going to make a peak D in the daily. But the stochastic and MACD are acting well. In the 120-minute chart, it's A, B, C, D, E, F. And that says the support at 189 to 188 is going to be really critical, but it's the first time it's gone to the 200-period moving average since it broke down back in whatever that was, back in July. So it's the start of a repairing situation for IBM. Now, so you're out of it right now, and you're looking to say, if this is some kind of a top, you're quite prepared to go short. But if, in fact, there's a trend change that is signaled in any of the indexes, especially if the longer term, the weekly, is starting to improve, it might be worth taking the long position. So now let's look at this. I'm going to make the suggestion that says, if the pattern that I'm looking at with the stochastic and the MACD in the Dow and the S&P are confirming that there should be at least 2 higher peaks in the daily charts, I'm not saying where they can go to, I'm just saying peaks at this particular point, then what I would consider is that IBM will participate, number one. Number two is, I'm going to make the suggestion that on the 120-minute, do you ever use the 120-minute chart?
Yes, I do.
Okay. If you're looking at the 120-minute chart, let me just put this in right now since everything seems to be working just fine for the moment. So, is that a P? No. That's an A. That's a B. It's as simple as that. C, D, E. Oh, no, it's an F, G. It's an F and a G. Could this be an instant restart? I'm going to put that in. I don't ever want to exclude techniques that I've developed. I'm going to put an E/A. Sometimes when you do this very quickly, it's easy to miss one. I'll try not to. An F/B and a G/C. If I have a G/C, it says to me, if there's just a shallow pullback, there's a really good chance it's going to go to leg D. Have a look at the MACD, the moving average convergence divergence, and the moving average, the fast moving average is still very strong. The stochastic's at 92%. I'm suspecting that IBM is going to go above the high of 191.32 for leg, at least another leg D. So here's my suggestion. Have a little patience. The level to watch right now is 189, around about 189.40 to 189.04. Those are the two support levels that are going to be important. If this breaks down without going above 191.32 today, if it breaks down and starts to go underneath 189.60, then I'd say hold off doing anything because that will turn into a G if it pulls back into this big candle of yesterday. So I'm going to make the suggestion that it's worthwhile, since you've just gotten out of it, that you have a little patience. Why? If it breaks above and goes to leg D, it starts to firm up the daily chart. And then I would say to you, after that, any pullback is worth buying, with a fairly tight stop of about 2.5 points. I think 2.5 points as a stop on IBM at 186 or 190 is really about the smallest you can have without, within the confines of this market. And right. Then what you want to do is, if it breaks to a new high, as you said, that gap over at 192.51 right. of the 6th of August, with a high the previous day of with a low of 194.35, that 2-point gap, that's the gap that you really want to be looking at. So I'm going to say, just hold off for the day, give it a little time, see if it pulls back, see where it pulls back to, and then the other thing I'm going to say is, any long position you get, I would start off with a smaller position, a trading position, and if it takes out 191.32, you might want to add another small position with a very tight stop on that, and the lower position that you've got will be your little mini core position. And that one must not take a loss under any circumstances. But definitely the position that you add, have a trading stop, and that has to have a minimal loss, so that all you're doing is you're trying to trade a trend which at this particular point looks like it's going higher. Even though we've got leg D, and you very often get quite a bit of a pullback from peak D, the momentum that I'm looking at here with IBM, you see my four horsemen, GE is acting very well. Today it's pulling back, but it's come right off the 22.92 bottom with almost a 2-point gain. That's very good. IBM is acting quite nicely here, and Triple M has had a really strong comeback from the 112.36 level almost to the 119.26 all-time high. And UTX is having a great day today. It's at an all-time high. So I'm suspecting that IBM could be dragged up. It's not one of the better stocks in my group, but it is a stock that is showing it does want to at least let's call it, participate in the rally. In fact, there's a percentage gain from 181. The $10, 5% gain. It's just lagging a little bit, the Dow itself. So I do like it, and I'm just going. You got a question?
Yeah, I was going to ask you if you draw a trend line from I think it's there's a hanging man on 531 to 718.13 across the top of those. Do you ever use trend lines? I mean, does that even matter that it's broken out above that?
Are we talking about? Okay. I don't know if you can see. I don't know if you can see my chart right now. Are you looking at Tiger TV?
No, I'm not. I'm not at home right now. But
okay. So I've got a trend line. I've got a channel, but it broke out of the channel. It's a beautiful. It's not my falling axe band. It's actually a trend line that I took from the doji high of the 18th of July to the high of the 30th of July. And it goes straight down into the doji candle of 3 days ago, and it happens to coincide exactly with the trend line at the bottoms of all those lows. And that's the one to me that is most important, and that's the one that says there could be a double to the upside on the breakout, and that would take you to, let me just do this, that would, from there, a minimum of 193, and that would go into the gap. So that's what I'd be looking at. That's the way I would look at it. But most importantly, I'm looking at this and saying, hey, wait a minute. Is IBM actually telling us that it's in a rectangle formation? It's the bottom of the monthly rectangle, and now it's starting to go back into the middle of that candle? That's what I'm looking at. And I think, in fact, IBM, if this market is going to go much higher, then I think IBM will be dragged higher, and then the target would be the 200-period moving average of 196. It'll completely fail if it breaks another trend line, and if it breaks, if IBM closes in the next 3 to 5 sessions under 188, I'd say 187. Then it will say this is a false breakout. So I hope that helps you.
It does a lot. Thanks very much. Appreciate it.
Thank you very much for calling. I appreciate your call. So let's just do this. I had another question in the den was GG. So GG is gold core. Now gold core is starting to, the stochastics at 9%. GG is trading at 26.28, down $1.49. This is going to be very important. I'd like to pull the charts out so that you can really see. You see these arch formations. There's also, the funny thing is, there's the potential, and I just say potential because I'm not a big fan of this pattern at all, but it's a potential that right here we're forming an inverse head and shoulders pattern. But this really looks like, I hate to do this, this really looks like a seagull or an eagle. Fly like an eagle. And those are the wings. And it would say that that eagle wing is going to come down. So this is what I would say. The most important candle is this doji candle of the 7th of August at 24.87. If, in fact, there is no turnaround in either the GLD or in the GLD or in the gold itself, the GCZ13, let me just put that up. See, it's almost the same pattern, but slightly more positive. If it doesn't find support in the next 2 days without taking out the 1317 area, it's a 1330. I have to consider that it could go deeper. So I'll wrap up with GG. I'll come back with it in a few moments, and there are a couple of other questions about silver and SWKS. I'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, we're back. We're looking at the GG, which is gold call. Here's a couple of things that I'm looking at. In the 120-minute chart, didn't have a chance to actually do that in the 120-minute chart, but it's pretty much the same chart that I'll be looking at. We'll be looking at the GLD with a gap down. So what I'm looking at here is that, I don't know if you're long, if you're looking to buy gold call, I would do this. Gold call, I would rather buy a pop up than to grab it here. But if you want to start a small position, you can start a small position, because with the 1 point stop, or a stop 1 penny below the doji candle of 24.87, that's about a 1.5 point, well, a much smaller, just a nibble, thinking that this area should hold as support. This is the only way I would do it. I would prefer to wait about a day or two. We did add to a gold position. No, we bought a gold position this morning. So far, it's actually right where we bought it. That's fine, because we bought the gap down, waited patiently for it, and I've got a reasonable stop. But it could be chancy, and all I'm saying is that I would rather get gold, a confirmation that gold has turned, silver the same thing, SLV. Let me just get to the SLV. See, here's the daily for the SLV. SLV is holding way better than gold, than GLD. And that's going only into the candle of the 15th, that very strong candle to the upside, very strong candle to the downside in the market. So this is more a positive for silver as it's standing right now. So yeah, a nibble, and also the silver, the 9-period exponential moving average is being touched right now. The GLD has gone underneath. So So the silver technically is a little bit stronger than gold. So only nibble, just a little nibble, and you've got to have a fairly tight stop. Probably want to see gold bounce, have a test, and then start a much bigger move. So it's just a starter position if you do anything. Now let's go back to what I was looking at before in, good grief, what was I looking at before? Oh, UTX. This is a question that I was asked in the weekly chart, the daily chart. Is it an F/ what is that? Well, the pattern that I'm looking at in my CD introducing the Chapman methodology, I talk about this, where this is called the double top or drop bucket pattern, where you make that cup formation and you fail at the top. But here the technicals are failing. It didn't confirm that second high. Look what's happening here. The technicals, in fact, have resurged. So I'm inclined to give the benefit of the doubt to say UTX, in fact, could be in leg B in the daily, and that would coincide with what we're looking at in the Dow, leg B, or that's a different chart pattern, and the S&P, SPX.X, and the Qs a little further along in leg A, making a potential peak B here and holding very well. I'm expecting it to go to C and a D. So I hope that answers the question there. And there was one other thing I spoke about silver. The volatility index. This volatility index, remember, it is imperative that you keep your eye on the volatility index. I made a big deal about this for the 10 years I've been here. Every single day in my opening call, if you want to know about the markets, I talk about the volatility index and what to look for every single day. I consider it to be very important, very important part of my language. Potential peak D in the 120-minute, I'll draw it in. This is what I'm anticipating, something like that in the consolidation in the Dow. I will not fight when I see the stochastic and the MACD come together like that to say that you cannot go higher. I think you will go higher in the Dow. The volatility down in the 14s or lower says this is an opportunity for buyers to come in. But in the very short term, it's an opportunity for the VIX to bounce to about 14.99, maybe 15.30, and then come back down. So overall, let me just give you my assessment as we go out. Stay tuned for Larry Pesavento, a fantastic show coming up, I'm sure, because he's going to be covering a lot of the commodities and currencies. I just wanted to show you this. The Dow has 1545, 50,450 next resistance, and 15,230 to 15,180 is very strong. And have a look at this chart as we're going to go out. It's a little late.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.